Do you want to learn how investors are building million-dollar portfolios right here in Louisville?
Yes, join the Investor Tribe for the $1 Million Panel on May 12th. You can see us at Roosters in Middletown.
Arrive by 5:45, bring your questions, and be sure to go on invtribe.com for more details.
Good morning. This is Milton Ali.
I'm Koya, the owner.
And we want to welcome you to the Investor Tribe Podcast. The Investor Tribe Podcast is brought to you by Kentucky Private Lending. And we want to shout out literally all of our Business Pro members. Woo! Shout out to all the Business Pro members. You can go to the invtribe.com and you'll find all our Business Pro members. You're going to see them on the pod very, very soon. It's absolutely amazing. We're going to have them on the pod and we love it. Also, you can go to INV Tribe at INV Tribe on all of our socials. We're on IG. You on IG. You live on IG. We're on Facebook, and you can like and subscribe on YouTube. Like and subscribe on Facebook. You can go to X. We do have watchers on X. I do see that, and that's super cool. That you can go to X and you can find our account on X. We are everywhere, and we also have members almost everywhere. So shout out to the members we got in Indiana. Shout out to the members in Ohio. Shout out to the members that are in Tennessee. Okay. Shout out to the members that are in Michigan.
Okay. Michigan.
Because yes, I know Michigan, go blue. We won the chip. So I'm super excited about that, right? Shout out to the members all the way down in Dallas, Texas, and the grand state of Texas. Absolutely amazing. Houston, that's where my people from and all that. Goodness. So it's super cool. Oh my goodness. What do you mean? Oh my goodness.
Yeah, I love Texas. I love Houston, but I got a crazy story about Houston. Oh my, I don't even know how to
look. Don't bring your party into the pod.
No.
I know you had a wild night in Houston. He was turned up in Houston, and that's your whole story.
It was a party of sadness.
A party of sadness. What happened?
Okay, so I had this deal that it seemed like the most beautifulest deal.
Okay.
And then
the most beautiful.
It did. Deal. I was excited. I flew to Houston.
Right.
Paid for the inspection, the appraisal, all of these things. I'm like, let's go ahead and get it. And then when it came down to it, the insurance. Oh my goodness, the insurance just blew the mortgage, just blew the whole deal apart.
Wait a minute. Are you trying to tell me that the insurance was more than the mortgage?
Yes, the insurance was crazy. I guess it was in a flood zone and
you know what? I remember this was a while back. And I remember I think we were on the phone and you're like, I'm in Houston. And I was like, oh, my people in Houston. You know what I'm saying? What's up? And I was like, and you were like, I'm buying a house. I was like, why didn't you call me? Because I could have hooked you up with the right people, because I knew you had, was the whole thing. Yes, and that kind of.
I loved Houston. I went to Houston one time as just a solo trip and I was like, I'm going to buy a house here. And
that is awesome.
Yeah, I know. It's crazy. That's what I do.
That is absolutely awesome.
Yeah, so I went to go try buying a house and the insurance was crazy. I was just like, I never knew insurance could even be that expensive, that it could mess up a deal. I literally.
So the insurance literally killed the deal.
It killed the deal.
Goodness gracious. And
nobody wanted to insure the house because of where it was located.
Because of the floodplain and all that kind of stuff. And so
just trying to even find an insurance company to even want to insure it. So I was like, hey, if they don't want to insure it, should I even be buying this house? And that pretty much killed the deal. So
right. And so I find that to be crazy, first of all, that insurance can now kill. It's almost like insurance is the new interest rate.
Yeah.
You know what I'm saying? It's like insurance is the new interest rate.
Interest rate. It's the insurance.
It's the insurance that's the real problem. And so today we're going to be right back after Legal for Less, and we're going to talk about how insurance is becoming the new interest rate. This is Milton Ali of the Investor Tribe podcast. Today we welcome back Renee Buster. And it's so cool to have you and your 30 to 50 years of experience all compressed within, with you just having, only 22 years old. Like, it's just like, I don't know how you condense all that time into such a short period of time.
That's so young.
Yes.
Thank you, Milton. I appreciate you so
yes.
much.
And today, we want to talk about,
if you're an investor, you gotta stay legal for less.
And so today on Keeping You Legal for Less, what do you have for us?
Today, I would like to ask the tribe to stop do-it-yourself legal and tax work.
Hey, wait a minute. Now you're hitting home.
I know.
So here's the thing. Like, look, you know how many times I just try to go to LegalZoom or other online portals to find my documents before you can go to the documents library on imvtribe.com. Mm-hmm. So are you saying that we shouldn't use any forms, that we should have professionals do everything?
Absolutely.
Yeah, help us out here because,
right.
I'm trying to save money. You're help us out here.
Absolutely.
Okay.
And seasoned investors can effectively use those tools
well. Okay.
Right. Your novices, however, don't know what they don't know. And the attorneys and accountants are there. They have years of education. They've spent a lot of money incurring that education. They have to do continuing ed every year. So they're going to know what you don't know. And they're going to be able to identify your pitfalls before you step in a steaming pile of you-know-what.
Okay, so that does make sense. So paint a picture for us and how that can really help us.
So it's always worth at least a conversation, right? It's very possible that you may be able to work out the actual form completion itself on your own. Some people shouldn't, but lots of people can manage that piece of it on their own. The part that they really need is the strategic conversation with the tax planner, with the legal advisor, so that they know exactly what they're doing and can forge ahead without cutting off their nose to spite their face.
Okay. All right. And so what are some of the things that young investors do that can really trip them up in this area?
Mm-hmm. I see a lot of people trying to use UPS store boxes and post office boxes, the address of the post office rather than the P.O. box as their registered agent office.
Oh, and they are not there to answer any questions.
They're not there to answer
any questions. And they cannot file an annual report for you.
And even worse, in the day and age that we're in now with the digital tools, the government is learning how to use those tools better as well as we are, right? And so a lot of the secretaries of state can now see when you're using a non-physical address.
Right.
And what people don't realize is they can immediately dissolve your company for non-compliance with the state statute. The state statute says that you have to have a physical location within the state. Wow. And you certify under penalty of perjury that you're providing correct information and that you're complying with state statute.
Okay, so hold on, let me. Okay.
You're talking about accidentally creating criminal charges for yourself.
Oh, that's not good at all.
That's not good at all.
That's not good at all.
No.
So how do we inoculate ourselves from that?
Having a conversation. A lot of attorneys and accountants will give you a free consultation. Buy the free consultation.
Okay.
Literally, all you have to do is invest the time and create a list of questions that you need answered by the professional.
That sounds good. And I think that is super important. So we want to thank you so much
Sure.
for this time. We're just grateful. The tribe thanks you for this time, and we want to make sure that you always tune in to the Investor Tribe podcast. You can go to invtribe.com, or you can follow us on all socials at INV Tribe. See you on the next one.
Welcome back.
Welcome back. And it's really interesting that investors seem to be obsessive over interest rates, but insurance can really destroy your cash flow.
Yes. It could definitely destroy. I think at the time I was expecting the mortgage to be around like $2,000 when I was looking at this Houston deal.
Right.
And it brought the insurance itself was bringing the mortgage to being about $3,800. So,
woo.
Yes, it was, the insurance was crazy.
So, you know what? That here is the perspective. It's no longer a line item you can just estimate casually. You know what I'm saying? Like you buy houses, and I bought many homes, and it's almost like I give a call to Mike DeVito, who's my main insurance guy, and he's like, yo, well, he don't say yo, but he's like, hey man, he runs a couple quick numbers for me, and it's probably, that equation is probably, at the most I'm looking at maybe 150 a month. 150, yeah, not quite 200 or anything, nothing bad. In some cases, even less. I'm talking about because some of the property I buy in maybe distress areas, I mean, we're talking just cash recovery. We're not necessarily, doing it like that. So, but literally, we're not talking it's not blowing up my deal. Right. He's probably, the only time I've had it blow up a deal was for a floodplain. And so I get that. And I did buy in a floodplain before, and that was the plan, was to just buy and hold and just hold on to it. But then they did a reassessment of the floodplain that did make life more difficult for me.
Oh, wow.
And so I can see how it affects your DSCR, it affects your cash flow, it can affect, which kind of trickles down to tenant affordability. Yes, right?
Yeah.
To the monthly rent that you gotta, right.
Yeah.
Exactly. And even the exit strategy, because these homes sell for less. Yeah. So when that deal blew up in my face, and my partner and I was like, hey, what are your thoughts about doing this to the point where, we need to get rid of some things? And I said, okay, how much we gonna sell it for? So we ended up selling it because it was a great area, and to make it so bad, across the street was not in a floodplain.
Oh, wow.
Literally across the street was not in a floodplain. How
did they come up with the floodplains?
and so that's a whole separate podcast. We should have somebody, or chat, if you know anyone that is in that space, that's with FEMA or with anybody, have them hit us up. We'll love to interview them and have a conversation about how that comes about. Because I agree. How do they come up with the floodplain? I'm sure we can probably look that up online, but
how's the water just going to get to your house and not across the street?
My house. But no, not across the street, but my house.
Yeah, it stopped.
You know what I'm saying? It stopped literally. I kid you not. We were in, my partner and I was like, you see the house across the street? That house across the street sold for $20,000 more.
Wow.
Because it was not in the floodplain.
Wow.
And we're just, not only were we upset, but the insurance was so high, we couldn't, cash flow it. Yeah. So we just cut our losses, right? We end up cutting our losses. And so investors need insurance quotes before they make offers and not after the inspection. I really do think that we have to really start educating investors on the full underwriting experience.
Yes.
Right. And I think if you had a better underwriting experience, I think you wouldn't have gotten into so far deep,
definitely.
Right?
100%.
And so, but outside of the insurance, was everything else in the deal looking good? Or were there any other red flags that you have to kind of look for?
It was definitely some other red flags just to make me choosing that particular realtor at the time. But I would say overall, I think the insurance is really what did it. I think the insurance was just it was crazy. So
yeah.
Yeah, the house had good equity that I was buying it at, so I was gonna end up having some good equity, but at the time I couldn't deal with just so much of the lack of cash flow. So yeah.
Yeah, because I really do think that it is like definitely one of those things where if you're not fully underwriting the deal right, you're dealing with some major issues. When you thinking about, people say, date the rate or, marry the house, date the rate, different things like that. I think now the conversation is, what is the insurance quote? Like, if you are near, like, let's say, we're in Louisville, Kentucky, and, and there's no major coastal fronts that we have to deal with, like on the East or West Coast or Florida or the Gulf Coast or what have you, or even in the West Coast with California. Yeah. And I've been to Huntington Beach in Orange County. Shout out to Huntington Beach. So there is so there is an appeal to beach and ocean fronts. And there's just a spirit. I think it's a spiritual appeal 100%. To ocean front to want to be there all day. At the same time, I'm conflicted because there is, I think from an insurance standpoint, you can't afford to live off of an ocean front or any kind of space that erodes every year. Yes. Like, did you know, I think we were looking this up before the show, that we lose in oceanfront space and oceanfront, like if you added all the geography that we lost in oceanfronts every year, did you know that we would lose the size of Atlanta?
Atlanta?
We would lose the size of Atlanta. We lose the literal size of Atlanta every year. It's like 133 square miles.
Oh, wow.
Like, it's a major city in oceanfront, just off of the erosion. Wow. And I really think that that's going to be difficult to, that's going to be very, very difficult to get insured. Yes. To be honest.
100%.
It's crazy to try to get that insured. And so that's, side point, what is that? Sidebar, aside, I do think that we are asking way more questions about the underwritability of a particular deal based on our ability to insure it.
Yes.
And so when you think about, you want to own something off the riverfront, here. Yeah. It's like those deals are what? I've seen some of those deals, they're roughly $10,000 a year. They're $10,000 to $20,000 a year in flood insurance, because it's not like it's a, it's almost it's a very high probable that it's going to flood every couple years.
Yep.
Last year we canceled, what did they cancel? The fireworks thing? They canceled Thunder over Louisville, the fireworks due to the flood. Last year. So we had it this year and that was fine, but we canceled, but they canceled. No, was it canceled this year? No, I think they had it.
Year. Definitely. And the cost of it is just, it's crazy. It's crazy. So, cause you when you buying a house, insurance just always kind of seems like just the extra thing in the room. Like it doesn't seem like the main thing to actually focus on. And
it's not sexy to talk about either.
No,
it's not like you're going to come up in here and be like, you know what I want to talk about today? Insurance. Like, said no one.
No
one. There is no way you can make that. But I do think it's a clear and present danger.
100%.
Right? When you think about, that I'm old, so there's the movies there. You know what I mean? But, you know what I'm saying? But it's so important to be able to kind of ask real questions about the roof, about all these different things on your underwriting. And what we should do is we're going to put, we're going to talk about maybe putting together like an insurance first style underwriting sheet, and we can have it for the members so we can figure out a way so that you guys can protect yourselves in this kind of way. You know what I'm saying? So that you guys can really go through the best and literally protect yourself, because quite frankly, it matters a lot, especially to our members that are buying in all different types of places. Now, if you're trying to buy a midterm or short-term rental and you're in that and you have that risk, then I'm not saying don't do it. What I am trying to say is to kind of give you some critical feedback in order to properly underwrite deals that are going to help you make the most money when it all comes down to it, if that makes sense.
Definitely.
Right? And so I think it's super important to be able to put all of those things together and have something that can really happen, that we can really just do our best so that, you know, so that we can make money here as we invest in real estate. And so with that being said, I think it's super important that, you know, that people tune in to the Investor Tribe podcast to learn. You can show up at our meetups. We have 3 meetups every month where you can show up to our networking event. We have a happy hour where we have $1 million panel that's coming up, and it's absolutely amazing. You're going to love this $1 million panel. The $1 million panel, we talk to regular people on this $1 million panel. You're going to absolutely love this $1 million panel where we talk to folks that control over $1 million. And you were on our first $1 million panel.
I was. It was so fun.
That was almost, was that your introduction to our podcast?
I think so.
What?
So yes.
That's right. It was, because it was our first, you know, way to look at our, you know, it was the introduction that that Koya, the owner, was introduced to the world. Right. So that's super cool. Right. And so what we're going to do is we're going to have that's coming up in the middle of May. And so you can watch that episode. That episode is probably going to air toward the middle to the end of May. And you're going to love that episode. And so you can also find us at INV Tribe. Please like and subscribe. Go to invtribe.com for more information. What socials can they find us on?
Everywhere. They can find us on X. Facebook is a big one. Instagram. I love Instagram personally, so definitely find us on Instagram. They can find us everywhere.
That is so true. And again, I'm Milton Ali.
I'm Koya, the owner.
And come back, and that's it for our show. But you can join us next time on the Investor Tribe podcast.
Watch the Investor Tribe podcast every Monday and Thursday, 9 a.m. Eastern.